Welcome. Today, we're diving into how you can set up a joint savings account with your partner, even if you don't share the same bank. Managing finances together is a big step in any relationship, and having a joint savings plan can help you reach shared goals, like vacations, a new home, or emergency funds. But what if you each have accounts at different banks? Don't worry. There are practical solutions that don't require you to open a new joint account at a single bank. Let's explore how you can make this work smoothly and securely. Joint savings accounts are more than just a place to store money. They represent trust, shared responsibility, and commitment to common goals. By pooling resources, you and your partner can keep track of your progress, motivate each other, and avoid misunderstandings about who contributed what. Even if you don't have a shared bank, you can still enjoy these benefits by setting up a system that works for both of you. Let's look at the options available. Before you set up a joint savings system, sit down with your partner and discuss your goals. Are you saving for a trip, a wedding, or just building an emergency fund? Knowing your purpose will help you decide how much to save, how often to contribute, and what kind of account or system will work best. Clear communication at this stage prevents confusion later on and ensures you're both on the same page. There are several ways to save together without a shared bank. You can use digital wallets, money transfer apps, or even set up a third-party savings platform. Each method has its pros and cons, so consider what fits your needs best. Look for options that are secure, easy to use, and accessible to both partners. We'll break down the most popular methods in the next scenes. Digital wallets like PayPal, Venmo, or Revolut allow you to create shared spaces for saving money. Both partners can transfer funds from their individual bank accounts into the wallet. These platforms often let you label your savings, track contributions, and even set savings goals. Make sure to choose a platform that supports both your banks and is available in your country. Money transfer apps like Zelle or Cash App can also facilitate joint savings. While these apps are typically used for sending money, you can agree to regularly transfer a set amount to one partner's account, which acts as the joint savings. Just be sure to keep detailed records of each transfer to maintain transparency and trust. Some financial platforms are designed specifically for shared savings. Apps like Capital or Twine allow couples to create joint savings goals, link separate bank accounts, and automate contributions. These platforms often provide visual progress trackers and reminders, making it easier to stay motivated and on track. If you prefer not to use apps, you can manually track your joint savings. Open a spreadsheet or use a shared document to log each contribution. Both partners can transfer their agreed amounts to one account, and the spreadsheet keeps everything transparent. This method requires discipline, but offers full control and flexibility. Agree on the rules for your joint savings. Decide how much each person will contribute, how often, and what the money can be used for. Setting clear guidelines helps avoid misunderstandings and ensures both partners feel comfortable and committed to the plan. Automation is your friend. Most banks and apps allow you to set up recurring transfers. By automating your contributions, you reduce the risk of forgetting and make saving a consistent habit. Both partners should set up their own automated transfers to the chosen savings platform or account. Regularly review your savings progress together. Whether you use an app or a spreadsheet, set aside time each month to check your balance, celebrate milestones, and adjust your plan if needed. This keeps both partners engaged and motivated. Transparency is key to successful joint savings. Make sure both partners have access to records and can see all transactions. This openness builds trust and prevents any suspicion or confusion about the money. Agree in advance on how and when you can withdraw money from your joint savings. For example, you might require both partners to approve any withdrawal or only use the funds for specific purposes. Clear rules help avoid conflict and ensure the money is used as intended. Discuss what counts as an emergency and when it's okay to dip into your joint savings. Having a shared understanding of emergencies ensures that both partners feel secure and respected, even in stressful situations. If your savings method earns interest, decide how to split it. Will you divide it equally or in proportion to each partner's contributions? Make this decision early to avoid disagreements later. It's not fun to think about, but it's wise to agree on what happens to your joint savings if you break up. Will you split the balance equally or according to contributions? Having a plan protects both partners and keeps things fair. Depending on your location, joint savings, even without a shared bank account, can have legal implications. Check if there are any tax or reporting requirements, especially if large sums are involved. When in doubt, consult a financial advisor or legal expert. Always prioritize security. Use strong passwords, enable two-factor authentication, and only use reputable apps or platforms. Both partners should be vigilant about phishing scams and unauthorized access. Every few months, review your joint savings system. Is it working for both of you? Are there any issues or improvements needed? Open communication ensures your system stays effective and fair. Don't forget to celebrate your achievements. When you reach a savings milestone or achieve a goal, take time to enjoy it together. Positive reinforcement keeps you both motivated for the next goal. Let's say you and your partner want to save for a vacation. You decide to use a digital wallet and each contribute $100 per month. You set up a shared goal in the app, automate your transfers, and track your progress. When you reach your target, you both enjoy a well-deserved trip. For an emergency fund, you might use a third-party savings app. Both partners link their accounts and agree to contribute $50 each per month. The app tracks your progress and sends reminders, making it easy to stay on track for unexpected expenses. If you're saving for a home, you might prefer manual tracking. Each partner transfers their share to a dedicated account, and you log every deposit in a shared spreadsheet. This method gives you full control and a clear record of contributions. When selecting a platform or method, consider factors like fees, ease of use, and customer support. Read reviews and test the platform with small amounts before committing to larger savings. Open, honest communication is the foundation of successful joint savings. Regularly check in with your partner, discuss any concerns, and adjust your plan as needed. This ensures both partners feel heard and valued. Be aware of common mistakes, like failing to set clear rules, not tracking contributions, or ignoring security. Address these issues early to keep your joint savings plan running smoothly. Life changes, and so should your savings plan. If your income, expenses, or goals shift, revisit your joint savings system. Adjust contributions, methods, or rules as needed to stay aligned. A joint savings system is any arrangement where two or more people save money together for a shared goal. This can be formal, like a joint bank account, or informal, using apps or manual tracking. The key is collaboration, transparency, and mutual agreement. A digital wallet is an online service or app that allows you to store, send, and receive money electronically. Many digital wallets offer features for shared accounts, goal tracking, and automated transfers, making them ideal for joint savings without a shared bank. Setting up a joint savings system without a shared bank is absolutely possible. Choose the method that fits your needs, communicate openly, and set clear rules. With the right approach, you and your partner can achieve your financial goals together, no matter where you bank.